Welcome to ETF Leaders, powered by the New York Stock Exchange. Joining me today is Mark Lieb. Mark is founder, president, and CEO of Spectrum Asset Management. Mark, great to see you. Thanks for joining me.
Well, thank you for having me today.
A pleasure. So Mark, tell me, what are your expectations for the preferred and capital securities markets in 2022?
Well, obviously all fixed income has been going through this whole idea of how much they're going to raise the interest rates. And the market, I think, has gotten oversold. Preferred's really been trading around the same level as municipal bonds, and a lot of the longer duration is off significantly more. I think that we're going to get into a situation where the markets are, even though they're looking for a lot of rate increases, we're not going to get as many as I think people think about, and we can talk about inflation in a minute. I think the conversation by late spring, early summer is going to really turn to what does the Fed and ECB have on their balance sheets? What are they going to be selling in the marketplace? And remember that when the Fed and ECB and the central banks are buying paper, they're putting liquidity into the marketplace. When they're not buying and selling, they're taking liquidity out of the marketplace, and which is a backdoor way of raising rates. So I think the conversations by the summertime is going to be, what do the central banks have? What are they not going to buy any longer? And what are they going to be looking to sell? Well, luckily, in our little world of preferreds, the central banks have not been buying our paper. They don't own our paper. We're basically banks, insurance companies, and utilities. So, and they have great balance sheets, so they didn't need to have that support. So I think that as people are going to be looking for yield, and obviously people talk about recession, what could or could not happen, but people are going to be looking for yield. And I think that our market could be set up, pretty well, because we're not in one of those asset classes that are clearly people are going to be focusing on. Hasn't been too much conversation yet. A couple articles we saw recently in Bloomberg just beginning to talk about it, but those conversations are coming. So we're, I think, set up in a pretty good way. Also, municipals is a similar situation. Central banks don't own municipals. So I think we have probably a good second half of the year. We got great spreads, good entry points into the market now. But I think the second half of the year will be good as people are looking for yield.
Okay. All right, so inflation, hot topic. Are you concerned about inflation?
Well, all of us are concerned about inflation. I think inflation has got several different factors involved to it. None of us were alive with the last pandemic in 1918. We had this worldwide pandemic where the economies around the world shut down, basically, and then rebooted themselves. And, obviously there was supply chain issues, and there's still supply chain issues. So that's part of it, which, raising rates doesn't fix that. Number two, there's obviously the political issues, and as I promised you, without getting into politics, there's been some mistakes that have been made, on the political side, which is helping, raise inflation. And number three, obviously, you got the war in Ukraine, which moving rates around does, that's unfortunate, a terrible disaster, and it hasn't been a war like that since World War II. So you got a lot of different things that are involved by just raising rates doesn't fix some of these problems. So I think we're going to be in an elevated, inflation numbers. We could be peaking now, we could not. Again, some of it's got to do with the war, which is completely out of the control of central banks. But we'll have to see. I mean, I think it will be trending down, by the end of the year, and markets like that when they'll be going down. I think the economies are going to be struggling some more, which also puts a cap on inflation. I mean, inflation, it's like a cancer in economics. I mean, it can cause a lot of damage. There was a recent article in Bloomberg that was interesting that over 80% of the working population in the United States lives paycheck to paycheck. And 100% of the population is paying 50% more for energy, gas, heating, and air conditioning, and almost 50% more for food. So you've eviscerated, excess capital, discretionary money of 80% of the working population. That's going to start showing up in numbers. Probably not yet, but you're going to start to see that. So inflation's it's a combination of different factors. Unlike when I was managing money in the 80s, the economy was overheating and you raised the rates, and Volcker did a good job of doing that. But now you've got a lot of other things that are in the mix, especially the Ukrainian war, which could go on for quite some time. I mean, it's, and that's clearly, affecting inflation.
All right, so now tell me, what do you think are the biggest opportunities in the market right now?
In our market, well, our market is really divided into three areas. You've got the $25 par preferreds, which trade on the New York Stock Exchange, which are basically controlled by the ETFs. You got the $1,000 pars, which is the institutional side of the market, and you got the contingent capital prefers, which is the European version of that marketplace. I think there's opportunities in all three. I think that the $25 par market will probably be more volatile, a little bit more volatile, but clearly where we are spread-wise, the spreads relative to the senior debt of the same issuer, it's very attractive. And again, we've also got the situation where a lot of what we buy also is taxed at qualified dividend income, which is taxed at a lower rate. So we kind of trade along with municipals. But again, I think it's, the conversation is really going to come to what do the central banks have and what don't they have. So I think that, we're set up pretty well for the second half of the year. And that conversation is coming. It's a matter if it's spring or summer or early fall, but clearly it's going to be a major issue. So I think we're set up pretty well. We're buying good quality companies with good balance sheets and good earnings, and in the end, you don't lose money buying good quality companies. So that's how I see it.
Okay. All right. Well, Mark, thank you so much for joining me.
My pleasure.
And that's ETF Leaders, powered by the New York Stock Exchange.